Hi, and welcome to the weekly fundamental podcast. This is Rini Mehta. During the last week, Indian markets took note of rising global interest rates amid elevated commodity prices, but took comfort from RBI keeping rates steady and a decent domestic earnings season. Indian markets were marginally weak during the week, with both Nifty and Sensex losing around 0.6%. The Nifty small cap index and mid cap index underperformed during the week with loss of around 1.2% and 1.3% respectively. All the sectoral indices ended in red during the week except for Nifty Media and BSE Metals. BSE IT was the biggest loser. It seems budget's short-term influence on the broader markets has been diminishing. However, the budget does lay a foundation to determine which pockets of the economy are likely to benefit from a mid to long term perspective and offers an opportunity to position one's portfolio accordingly. And on the economy front, RBI's Monetary Policy Committee, contrary to market expectations, kept the reverse repo rate unchanged while maintaining an accommodative stance. With higher government borrowing announced in the budget, soaring global inflation, and the lag in private consumption and investment, Dalal Street will monitor the future path of monetary policy. Coming to the US, the Consumer Price Index for January, which measures the costs of dozens of everyday consumer goods, rose 7.5% year on year as per the Labor Department. The monthly CPI rates also came in stronger than expected. Both headline and core CPI rose 0.6% compared to estimates for a 0.4% increase by both measures. Even with the challenges posed by the highly contagious Omicron variant, inflation still remains high. The inflation numbers come at a crossroads for the US economy, with 2021's rapid growth pace expected to slow this year as fiscal and monetary stimulus fade. Now, if we look at the foreign investment flows, FIIs flows in the month of February was negative to the tune of rupees 9,821 crores. FIIs took note of rising global interest rates amid elevated commodity prices. The yield on benchmark 10-year US Treasury hit 2% for the first time since August 2019. Overall, what we think is equity markets is expected to remain volatile as the sharp rise in US consumer prices raise the prospect of aggressive monetary policy tightening by the Federal Reserve, potentially weighing on global growth. The release of the US data, which showed consumer prices surged 7.5% in January on a year-over-year basis, the biggest annual increase in inflation in 40 years. So we believe going forward, FPI flows will remain volatile. Now let's move on to the top stock ideas. Our pick of the week is Tata Steel with a target of rupees 1,625. Tata Steel's margins in third quarter moderated on expected lines on higher coal costs, both in India and Europe, whereas weak demand led to lower volumes. Higher coking coal prices and lower prices should further reduce margins in India. However, Europe margins are likely to benefit from contract revisions. Tata's Neelachal Ispat Nigam acquisition, although expensive, opens growth options and internal cash flows would comfortably fund growth projects without adding leverage. So we maintain buy on this stock on basically attractive valuations. Our another stock idea is Bharti Airtel with target of rupees 850. Bharti's third quarter performance was marked by a marginal loss on EOP subscriber base despite a sharp 20% increase in prepaid tariffs and a healthy increase in operating cash flows. Overall results were a tad below our expectations, led by lower than estimated average revenue per user and higher operating expenses. We reiterate buy rating with an unchanged fair value of rupees 850, expecting the company to benefit from one is an increase in industry average revenue per unit. Second is improvement in subscriber mix, and third is gains from digital initiatives. That's all for today, guys. See you again next week with more updates. Thank you.